timing. You want to be in a position to where you don't have to do things immediately. 1031 exchange gives you a certain time frame, and if you don't do what you need to do in the time frame, you're kind of screwed. Whereas you do this and you get it in place, and you've got a lifetime ahead of you of being able to do certain kinds of business or real estate transactions. Also feel like, where it's appropriate and needed to deal with some of the major estate planning, you can do some insurance, irrevocable life insurance planning and things with it.
What are your thoughts on the deferred sales trust based upon what you've learned over the years?
Yeah, so I believe it's a great tool to use to also buy businesses and or real estate once it's in place, because now you can start to build your wealth inside the DST in such a way that you still are familiar with the skill set that you have, which is growing businesses or building real estate portfolios. It doesn't have to be liquidated, but it can be liquidated in the sense of an investment with income returns. It could be, though, it's real estate or business returns. And, a lot of people like to be able to still do those things once they've done some level of a transaction. So I think that's one of the biggest benefits of it.
I couldn't agree with you more, right? I mean, to me, if it wasn't for that benefit or that feature, I would not be here. I would not be, selling the deferred sales trust, right? Being the trustee for it, because the ability to have the option to, because no one cares more about your wealth than you, right? To go back into investments alongside of the trust, tax deferred, kind of like a self-directed IRA, right? A self-directed 401k, but and not have to do that, but you can, right? And or with partners. It's just so flexible to be able to diversify and build that wealth. And not only the other part of it too, it's nice. It's not just a tax deferral strategy or eliminate the estate tax. You can actually build wealth with it. And we think it's the foundational way to build wealth once you exit, because you can have second promissory notes after the trust is formed by partnering with the trust and buying more assets and having those grow in wealth. But hopefully you're doing that at optimal timing. You're buying when the deals make sense. I mean, we've seen cap rates they're starting to adjust some here, right? As sellers realize that they need to sell, right? But debt has exceeded cap rates. It's a negative arbitrage still. And so if you're in a 1031, you're going, why am I trading and going into a negative situation unless you have a huge value add? But again, if you're in business, you're selling a business or cryptocurrency or stock, there's no 1031 option. And so the deferred sales trust becomes that option for that. Any thoughts on that, Earl?
Well, I think the other thing that I think about just related to that is timing. You want to be in a position to where you don't have to do things immediately. 1031 exchange gives you a certain time frame, and if you don't do what you need to do in the time frame, you're kind of screwed. Whereas you do this and you get it in place, and you've got a lifetime ahead of you of being able to do certain kinds of business or real estate transactions. Also feel like, where it's appropriate and needed to deal with some of the major estate planning, you can do some insurance, irrevocable life insurance planning and things with it. That's pretty cool. So,
100%.
Some keys for me and what I've seen in planning.
Yeah, absolutely, Earl. And by the way, if you want to learn more about this, you can go to capitalgainstaxsolutions.com. You can also check out the new book, Building a Capital Gains Tax Exit Plan. We have Kevin Harrington from Shark Tank in the book. I have a couple chapters as well and a couple other amazing professionals in the book. And if we have come with the second book, Earl's definitely going to be a part of it. If you'd like to be a part of it, I'd love to have him in the book. And so you can learn all about the proven playbook for how to really exit any asset of any kind, defer the tax using the deferred sales trust, eliminate the estate tax using the DST 2.0. Check out the book on Amazon.